good morning, good afternoon, maybe even good evening to this special seminar on COVID-19 Impact and Policy Challenge for Southeast and East Asia, jointly organised by the Monash Centre and also by the University of the Philippines School of Economics. So I'm Hal Hill, I'm sitting in chilly Canberra and it's my pleasure to be moderating the session. I want to congratulate both institutions, the Monash CDES and the UP School of Economics, for running very stimulating and informative webinar series in recent months in these difficult times. I'm very pleased to be associated with these two places, partly because I've spent quite a few years together at both Monash and at UP. So we're honoured to have three highly distinguished and eminent speakers who I think everyone will know. They have great knowledge of the issues and they speak with great authority, and we thank them very much for joining the webinar. So the order of speakers will be as is shown on the program. We start with Dr. Chatib Basri from the University of Indonesia. Dr. Basri is one of Indonesia's most productive and prolific scholars, written many things, starting, I may say, with his 2001 A&U PhD dissertation, which I knew a little bit about. He's worn many hats and had a very distinguished career, including two periods as cabinet member of the second Yudhoyono administration, as Minister of Finance and as head of the Investment Coordinating Board. So welcome, Dede, great to have you. Next is Dr. Cyn-Young Park, who's a very senior official and economist working at the Asian Development Bank in Manila. But I think, Cyn-Young, you're currently in Seoul. Cyn-Young is well known to all of us. She's been with the ADB for many years and has been a leading figure in the economic and policy work of the ADB. So she also speaks, of course, as an ADB official, as a Korean academic, but with wide regional knowledge. Now, the third speaker, last but not least, is Professor Orville Solon, and Orville is Dean of a wonderful institution where I spent a couple of years of my life, the School of Economics at the University of the Philippines. That is a major research and teaching institution in the Philippines and indeed in Asia. And Orville himself, in addition to being Dean of that eminent school, has been a very productive scholar working across many fields, including health economics. So we've got a wonderful panel, and my job is really just to moderate. I have been asked to say a few words at the outset, so let me just briefly try and set the scene a little bit, and then we'll go straight to the speakers. So lots of things to think about, and just a few pointers, I guess, to throw out for the subsequent discussion. First of all, the virus, of course, originated in this hemisphere in East Asia, but East and Southeast Asia appear to be handling the virus better than most other regions of the world, handling it both in a health sense and also in an economic response to it. It's a reminder, of course, that the crisis originated in the health sector, but it very quickly spread to become a crisis that has affected practically all dimensions of our life, economic, political, and social. And with an economic collapse that's also threatened a financial crisis, it's disrupted global supply chains, it's affected living standards in the region, especially of the vulnerable, food supplies and much else. It's also had very uneven impacts. It's had uneven impacts by sector and by region of economies. So, for example, the travel industry has basically stopped. It means that the areas of the economy which are dependent on the movement of people, which is, of course, trade in services, have been deeply affected. So the tourism locations like Bali and Phuket and others have been particularly badly affected. It's also affected, of course, health workers, the frontline workers who are in a sense, the heroes in trying to manage this terrible crisis. So it's tested governments everywhere, it's tested individuals, it's tested communities, national and local. It's also tested global and regional institutions and the framework for cross-border cooperation. And that is occurring at a time when these global and regional institutions are under challenge as never before. One other point to note is its variable impact across countries. So for example, in this hemisphere, several countries stand out. We hope to learn more about them today. For example, within Southeast Asia, Vietnam, although a relatively poor country, seems to be managing this crisis very effectively. The same applies to South Korea and Taiwan. One other point to note is there is huge uncertainty. We don't know how long this pandemic is going to persist for. We don't know whether a major so-called second wave is coming. We don't know when there's going to be a vaccine developed. We don't know yet how quickly the spread, the panic can be contained geographically and within country borders as well. A final point to note is in every crisis, I guess we've got to ask the question, is there a silver lining in such a terrible set of circumstances? And that's the principle of never waste a crisis. And we know a lot about crises and their impacts on policy making and political economy. In particular, that they do sometimes embolden governments to take difficult decisions, not just on the crisis, but on a whole set of broader issues. So these are some of the issues, just to lay out a few illustrations of the kinds of topics we'll be discussing with our eminent speakers. And I'd now like to invite the speakers to present. So starting with Dr. Basri, then with Dr. Park, and finally with Professor Solon. So we'll go with the presentations one by one, and then we'll open it up for what I'm sure will be a lively Q&A session. We're due to finish at, I think, 3:30 Melbourne time. So we have about an hour and a quarter for the presentations and discussions. So thank you again for joining us as participants, and thank you to the speakers and thank you to the organisers. Let me now invite Dr. Basri for the first presentation. Thank you.
Thank you very much, Hal, for the very kind introduction. And good morning, good afternoon, and maybe good evening for everyone who joined or participate in this webinar. Thanks for having me. It is an honor to participate in this webinar. I think one thing that Hal forgot to mention, my other qualification is I am his former student and still is. He didn't mention when he, talk about my CV. Let me start by, I've got some slides here. Let me try to use it. I understand that I only have 15 minutes for this. Of course, we do understand. Hal mentioned about so many issues related to this pandemic crisis. But let me, in the case of Indonesia, let me focus on the fiscal issue. And then I'll explain later on why do I think that the fiscal issue is a very crucial and very important. I took this chart from a joint paper between me and Hal a couple of years ago. And I tried to, I make an update about several crises that we used to have in Indonesia. Yeah, so it was the 97 and 98 crisis, the 2008 crisis, the taper tantrum, and then COVID-19. Yeah, of course, it's too early to make a conclusion because we only have one data point regarding the COVID. But one thing that it is very interesting, if you look at the impact of the economic growth, the decline of the economic growth, if you look at the global financial crisis, the taper tantrum, not much impact on the Indonesian economy at that time. Similar to the exchange rate as well. We depreciated, there was a capital outflow. But if you look at the COVID, if you're talking about slope, of course, there is some issues about this scale here. But if you look at the trend, the decline of the economy within one quarter was pretty similar like what we had back on 1998 to the Asian financial crisis. If you look at the impact of the exchange rate, the outflow that we had, it has affected our exchange rate, was pretty much similar like the slope like what we had back on 1998, even though in the case of 97, 98, took about a couple of quarters before this, rupiah depreciated. So in terms of this scale, it's quite interesting to look at this issue. Of course, we need to discuss more. And this is the impact to the Indonesian economy. I don't want to go into detail. The GDP growth dropped from 5% to 2.97% within 3 months. In fact, Indonesian government officially announced the COVID case was only in March. So within 1 month, it's dragged down the average 3 months from 5% to 2.97%. Yeah. And if you look at the pattern of consumption, it is very interesting. If you're talking about restaurant, hotel, exactly what Hal said, drop, transportation and communication, no one traveled again, apparel and equipment. But if you look at education and health, so the demand for the health product is increasing quite substantially, especially related to the online activities. And if you look at on the growth by industry, information and communication, this information and communication capture the data. So like what we are doing now, using the online, the webinar. So there is a shifting the activities economy from the so-called the offline into the online. But the rest, you see the economic collapse. If you look at the purchasing power, farmers' terms of trade, the housekeeper, farmer, etc., after February 28, tend to decline. So basically, all the data, at least for the first quarter, confirm the issue is come from the both demand side, the production, and also the consumption side. So I don't know, this is, I'm fortunate or unfortunate. I experienced several crises in Indonesia as a policymakers. Yeah, I recall in the 2008 crisis, it was triggered by the subprime mortgage. And then I would call that situation was largely a demand shock. It was because it's translated to the global trade, and Indonesia was affected through the external factors. So what we did at that time was relatively easy. We just focused on domestic economy because domestic economy is accounted for about more than 60% of our economy. We introduced the so-called the traditional pump priming, stimulus fiscal, cut the interest rate, and it was very easy. Indonesia could maintain about 4.6%, the second fastest growing economy among the member of the G20 at the time. When we had a taper tantrum, the problem was obvious. It's about the current account. So what we did was a combination of the expenditure switching and expenditure reducing policy, and we managed to survive the taper tantrum within 7 months. But in the case of COVID, this is very different because China is a hub of production base in Asia. So there is an impact on the demand shock because it hits our export. On the other hand, China is also accounted for the 20% of the global supply chain. So there is an impact on the supply shock as well. So under this kind of situation, the traditional policy response like what we did 2013, 2008, or 98 perhaps will no longer relevant. And to make things worse, the government in many countries introduced the so-called lockdown or the social distancing. And why this is important on this particular issue? Because by definition, market is a place where two parties can gather for facilitated exchange and goods and services, physical and virtual. And one thing that required from the social distancing or lockdown is people are not allowed to meet. So all the activities which is required physical cannot be executed. So without market, economic activities basically collapse. So the implication is the business before COVID, before the social distancing, before lockdown, was pretty much okay in the case of Indonesia. But after the government introduced the lockdown, we asked people to stay at home. So the logical consequences is we need the social protection. Why? Because we ask people to stay at home. So people are being paid to stay at home. So this is different, the social protection approach is different with the case of 2008 or 98 because we protect poor people at that time as a consequences of the crisis. But now we should give a protection to the people because we ask them to stop to work. to stay at home. So that is why the role of the social protection very important. When we introduce the lockdown, social distancing, the traditional pump priming fiscal and monetary policy will not work, because the government gave, for example, like a rebate for discount airfare or a subsidy for housing, but nobody, will do travel. It won't work. So that kind of traditional fiscal pump priming will not work. So the question is, what kind of policy response that will be appropriate under this kind of situation? And this is completely different like what we had a couple of years ago. The Indonesian government introduced the government stimulus on 3 issues. They just focus on health, especially test kits, paramedics, medicine, etc., to focus on the health issue. The second one, as I mentioned earlier, as a consequences of this, we ask people to stay at home. We introduce the social protection here. But the problem is the design of the social protection that we have is only protect the poor. But what about the lower middle income group, which is not considered poor, but they are not eligible for the social protection? So the government need to extend the social protection into that level. The third one is to the business activities. Why it is important? Because the government needs to provide the lifeline. Naturally, the banking sector, they will stop lending when they realize there will be a risk of the non-performing loan. If they stop lending, then the business activities will stop, and there will be a massive issue of unemployment. So somehow, we need to extend the credit line. It reminds me, when I was Deputy Finance Minister for the G20, none of the Exim Bank would like to promote, to provide the export credit during the global financial crisis. So what the G20 member decided at that time, if we ask the Exim Bank to continue to provide the credit line to the exporter, and we guaranteed them. So that kind of model, it's being prepared by the government. So as a result, the fiscal stimulus, or Paul Krugman call it the disaster relief rather than stimulus, because it's focused on more on the survival mode, need to be increased. In the case of Indonesia, it is stipulated in our law that the maximum budget deficit is 3%, was 3%. So we introduced the state emergency law, which allowed the budget deficit to go beyond 3%. As a result, now the fiscal deficit is about 6.3% of GDP. The question is, do we need more? I think so. Yeah, because as I said, we don't cover the lower middle income group. Yeah, they are not considered poor, but because we ask them to stay at home, we probably need to give a protection for them. And so far, we don't have it. And according to the World Bank, there are about 115 million people considered classified as the aspiring middle class. Not yet middle class, aspiring middle class. If you assume that a family consists of 4 people, then maybe you need to support probably about 30 million households. Yeah, so we probably need to increase the budget deficit. To what level? It depends on the financing. Indonesia, not as rich as Australia, who could afford to provide the budget deficit around, correct me if I'm wrong, 10% of GDP. Singapore also 10% of GDP. Malaysia 10% of GDP. US 10% of GDP. So if we want to increase the budget deficit, the issue is, how do we finance this? Then we need to support the extra budgetary support. So about 2-3 weeks ago, under the ABER, the Asian Bureau of Economic Research, we proposed one of the proposals, the cooperation between Australia, ASEAN countries. Perhaps it is important for all of us in the region to work on this issue, the budgetary support. I can imagine countries like Indonesia, Laos, Cambodia. Perhaps this is the thing that probably will be very important for the Southeast Asian countries. Now let me move to the global outlook in Asian economy. I just took the OECD scenario. They said that we went back to the 2019 level. And in most countries, but they said that they will cover 2021. We don't know yet. I think it's very difficult to make a prediction because it's moving target. If of course, the Indonesian government tried to make a forecast, the GDP growth ranging from minus 2.3% to minus 2% to 2.3%. But of course, if we make a prediction about GDP growth nowadays, it just shows that we have a sense of humor because it will be wrong anyway, right? So, but OECD mentioned that we won't back to the 2019 level. One thing that I would like to highlight here, the impact to the global trade to the Indonesian economy. Yeah, because the global is plummeted because of the pandemic. Our share trade to GDP is around 30% compared to Singapore, more than 200%. So that's explained why Singapore in the first quarter, they experienced a negative growth, whereas Indonesia could still maintain about growth 2.97% because we focus on the domestic economy. But once the pandemic affect the domestic economy, probably we cannot maintain the positive growth anymore. Yeah, but so one thing, it is good that Indonesian economy is relatively insulated during the crisis. But later on, when there is a recovery in the global economy, the recovery in our side will be much slower compared to Singapore. Yeah, at the same time, because the country is dependent so much on the natural resources, we depend so much on the coal price, the palm oil price, the commodity price. And I don't see that the recovery will take place soon. So looking at this, maybe the recovery will take on the U shape rather than the V shape. Now, let me move to the, since about 2 weeks ago, the Indonesian government tried to reopen the economy. With the one assumption, they do believe that by reopening the economy, they call it the new normal, this will bring back the growth back to normal. The question is whether the new normal will bring back our economy to the normal situation. The answer is, I don't know. But it is very interesting to look at that, what will be the implication of this new normal. I think this is a very interesting subject for the research about the behavior of the people, after the new normal, because this is unprecedented. The first question is, who is going back to work? It is very interesting to look at the case of India, the case of Indonesia, of Brazil, of Mexico, large population countries. They are having trouble of managing the so-called lockdown. And I think one of the reasons behind it is because the issue of the social protection. Because as I mentioned to you earlier, that people will stay at home provided the government can compensate them. Or if we use the labor economics framework, it depends whether the reservation wage is high enough or the non-labor income is high enough. In a country like Indonesia that we don't have the unemployment insurance, that we would expect that for the poor people, they don't have choice. Once the government allow the people to come back, the lower middle income group, they will go immediately back to work. Yeah, and that's already happened with the traditional market. But for the middle and upper class, they have the luxury, whether they want to go to the shopping mall, do leisure, etc. So this is very interesting that shopping mall is still quiet here, but if you go to the traditional market, it's compact now. Yeah, so I think this is something that very important. The implication of it is probably people will go to the primary activities. They're going to work, they go for the traditional market, but not for leisure. And the similar situation also applied in the case of China. If you look at the number of passengers in the subway during the working days, packed, but not on the weekend. So maybe the implication is exactly what Hal said. Maybe some entertainment business, hospitality, hotel, tourism probably will cover later. But if you're talking about the primary product, the online business, they will do it, they could recover soon. Yeah, I mentioned about the shopping mall and the traditional market. It is very interesting to look at the case of Sweden because Sweden is exceptionally relaxed, but Denmark is strictly locked down. I think the Economist magazine put the chart on this because in the case of Sweden, there is similar pattern between Swedish people and Danish, that tend to spend so much money on that because they prefer to stay at home. And one of the reasons I do believe, again, because they do have the unemployment insurance. But in the case of Indonesia, unemployment, being unemployed is a luxury goods. Only the rich people could afford to be unemployed. If you are poor, you have to work. Too poor to be unemployed. So the implication of this is, if we want to maintain the situation as it is, then the question is what kind of policy that we need to do the jumpstart. It is very interesting to look at the loan to deposit ratio in the banking sector. the loan to deposit ratio in the banking sector is declining now because the number of credit is declining. And why is that? Because business activities, they don't demand for credit now. Why? Because there is no activities. So even the central bank lower the interest rate, it won't work. The monetary policy won't work because the first things that the government needs to do is to do the jumpstart is by inducing the fiscal policy. We did in 2008, 2013, what we did at that time to induce the demand is to introduce the so-called the cash transfer. I do believe that in Australia, you do have the paycheck program as well. Yeah. Once people get some money, they will buy some stuff, the primary needs, etc. Then it will boost demand. Then there will be a reaction from the business sector. Then you can introduce expansioning of the monetary policy. The other thing that I would like to discuss is I mentioned about the risk of the inequality. Maybe companies in the future will go to the less labor intensive to avoid this pandemic. So as a result, the return of the capitalists would be maybe increased quite substantially compared to the labor. And the sectoral, they will focus on the primary need sector, but maybe not leisure, etc. So there will be a sort of like gap between sector. And the lockdown, if you don't provide the social protection, it will be biased in favor to the middle and upper class, unless you could afford sort of like social protection like in Australia. Vaccine, I don't think the economy will recover 100% until we have a vaccine. So the question is whether the Indonesian economy, the recovery will be in the V shape. I don't think so. But if you look at on the U shape, I do believe that it's probably on the U shape. Why? Because we need to induce the demand first, and then will be followed by the monetary policy, etc., in order to recover. Then this will take long time. Yeah, I'll explain to you later on. W shape, it depends whether the second wave will happen. Now, let me explain why I do believe that the recovery will take on the U shape rather than V shape. Look at this. This is a bit with number here. But my point is, if you look at the tax revenue to GDP, by 2023, because our tax income depends so much on the corporate tax, which is mostly tradable, and then we depend so much on the natural resources, you could see the tax ratio by 2023 will be around only 8.4% of GDP, right? So there is a problem on the fiscal side because the tax revenue, yeah. If you include the tax ratio, means the royalty, etc., probably around 9 to 10%. On the deficit, now the deficit is about 6.3. This is the old number, 5.07, 6.3%. But by 2023, government tend to achieve the budget deficit less than 3%. Back to our original law that the budget deficit should go to lower than 3%. The problem is, because we increase the budget deficit here around 5% or more than 5%, 6.3%, our debt to GDP increased from 29% to become 36% in 2020. And this will continue until 2023. What is the implication? The interest payment will increase. Yeah, tax revenue will decline. The mandatory spending, like spending on education, according to the constitution, we need to maintain around 20%. So all the mandatory spending fixed, the debt to GDP ratio increased, the burden of the interest payment increased, but at the same time, the tax revenue declined. And the government tried to achieve the budget deficit less than 3%. So what I'm afraid, what would happen in the next 3 years is the government will introduce the so-called the austerity measures, like what recommended by the IMF in the year 1998. Seems to me that we probably need longer time before we come back to the old regulation that the budget deficit should go to lower than 3%. And the reasons why I do believe that we need the fiscal expansion, this will be my last slide. I conducted a sort of like, some estimate about the causality. Yeah, it is very interesting to look at the relationship, whether this consumption and investment. So consumption costs investment, but not vice versa. So if people start to buy stuff, then the private sector start to respond 1 or 2 quarters after that. But if the business sector start with the investment and we don't see the causality from the investment into the consumption. So it somehow shows, of course, this is very rough, that if we want to do the jumpstart, we need the fiscal stimulus. But the composition of budget, unfortunately, doesn't show that the government will do the fiscal expansion. Yeah, it could be followed by the monetary expansion, etc. And I can see that the energy and commodity price remain uncertain. The tax revenue to GDP tend to decline because the energy and commodity price remain uncertain. Whereas at the same time, the budget deficit will steadily decline until 2023 because we need to come back to the 3%. So under this kind of situation, I think Indonesia somehow, beyond this 2021, we probably need to do the fiscal expansion on the fiscal side. Of course, the question is, the issue will be between the fiscal sustainability and the fiscal stimulus. I'm not saying that the sustainability is important, but the theme for the fiscal this year will be whatever it takes. We need to put the economy back to normal. Then after that, we could introduce the so-called the traditional pump priming. How I think I leave it up here. Hopefully my presentation, doesn't go too long, more than 15 minutes. Thank you very much.
Thanks very much, Dede. A very comprehensive talk. You covered a lot of territory and both analytically interesting and lots of policy issues to think about as well. So we already have questions lining up for you and maybe other speakers, but let's now go straight to the second speaker. Again, it's a pleasure to introduce Dr. Cyn-Young Park. Cyn-Young, a very senior official at the Asian Development Bank, who is currently in Seoul. So over to you, Cyn-Young, and thank you very much again.
Thanks, Hal. Well, it's a great pleasure to be in the group and then share also some updates that the ADB recent analysis has made on COVID impact. Our latest economic assessment shows that the COVID-19 will cost the global economy about $6 to $9 trillion US. That's comprising about up to 10% of global GDP. The loss borne by Asia is about 30% of this estimated cost for the global economy. For ASEAN, this COVID impact is estimated to range between it's between about 4.6 to 7.2% of ASEAN GDP. The ASEAN will also lose 11.6 to about 18 million jobs, and the number of poor will rise by 5 million under $1.9 a day threshold, and 18 million under $3 per day poverty threshold. The sectors that are likely to be hit harder include light manufacturing, hotels, restaurants, road and rail transport, recreational services, as we all sort of experience now, the air travels really on hold, finance and then water transport really being affected severely. So this is our latest assessment for the economic impact of COVID-19. Globally, as I already summarized, 6.4% of GDP will be lost. in short containment. Short containment here, we define that flattening will happen in about 3 months. The long containment, the assumption is the flattening and the containment of the pandemic will take about 6 months. And under that long containment scenario, the analysis shows that in the global economy will lose about nearly 10% of its income as a cost of the COVID. Asia, as you can see that here, is about 5 to 6, 7% of the GDP will be lost. And China, given the early impact and then quite a severe impact on the supply chain disruptions, will also have significant the income loss of about 7.5% of GDP in short containment and 11% of GDP in long containment. These are the estimated the cost for the countries in ASEAN. What sort of comes out really is that the countries that rely heavily on trade and then foreign investment and relatively open seem to be more affected in both the short containment and the non-containment scenario. So as you can see that here, like Singapore really experienced a severe sort of impact. The countries that rely heavily on tourism receipts, especially Thailand, Cambodia, also experienced quite significant loss. Indonesia also, and then Laos and Malaysia, as well as in the region in general. Of course, to some extent, Philippines, Southeast Asia in general will experience about 5% of GDP and in long containment, about 7% of its GDP. And as Chatib already, kind of like elaborated, the COVID-19 is really worsening the outlook for the corporate revenue and then earnings. In US, we already see quite a bit of corporate defaults on the rise. And also this presents risks to the companies that have high leverage already, and they will experience difficulty in their debt service. And that's, I mean, in a way, like kind of like the commonly now quoted a lot that the countries will probably see a rise in non-performing loans in their banking system, and that actually also threatens the outlook of the post-COVID economic recovery. So given that the corporates are suffering and the impact of COVID is also severe on employment across Southeast Asia, about 4% of total employment will be lost, and like nearly 12 million jobs will be lost in short containment. In long containment, it will be about 18 million jobs, and then nearly 7% of total employment. In line with the economic impact, the countries that are more open to tourism and then manufacturing, and then the sectors that are kind of like heavily affected will also suffer the job losses. So you can see that the Cambodia, Laos, also the Singapore, in Vietnam, and those are countries that really have labor-intensive manufacturing, and then the tourism likely to also suffer quite a bit of job losses. But It was also mentioned quite a few times that what we worry about is the unequal sort of impact of COVID on jobs, and it's creates sort of risks to the income and then on non-income inequality that are already quite increasing across the region. The lockdown measures hit wholesale retail trade, accommodation, food services, and transportation sectors quite severely in the region. And these sectors account for about 16% of total employment in Asia. Manufacturing is also quite significant, such as the automobile, textile, clothing, leather, footwear, among others, also suffer severe domestic and then global value chain disruptions. And then these tend to be, with the exception of the automobiles, I mean, actually quite labor intensive, and then also vulnerable to various lockdown measures, social distancing, and the requirements. But what really is also important is the informal sector workers. It's not even probably like a picked up quite visibly, but in across Asia there are really large share of workers in the informal sectors. Informal workers about like even 70–80% of total employment in many countries, Cambodia, Myanmar, Bangladesh, Nepal, like Indonesia, Laos, PDR, and then so many these developing countries have informal workers, and that are likely to be hit much harder. As Chatib already mentioned, they are too poor to be employed in many times. So these are actually more particular sort of concern. Exports have been deteriorating in the past several months already. You can see that across Southeast Asia, Indonesia, Singapore, Thailand, Vietnam, all experienced declining exports during the COVID. And many countries have introduced more harmful trade measures, and then that they were also affected by these harmful trade measures. The number have been increasing, and then you can see that it was almost the peaking at the time of the COVID peak as well in March, and has been gradually declining. And then we see that the countries are gradually also opening the borders to essential trade. So what could be policy implications? The first priority, it's so obvious that we really need to quickly and effectively contain the spread of the coronavirus. The longer the containment period, the bigger economic impact will be. Macroeconomic stimulus policies, many countries have introduced, generally accommodative monetary policies, and then very active sort of fiscal stimuli packages. But a swift economic recovery will be needed to improve the quality of debts and avoid massive defaults, and therefore also prevent the rise in the NPLs. If the crisis, if the countries actually experience the crisis in the banking system due to rise in the corporate defaults and then NPL, it will delay the post-COVID economic recovery. So it's quite important how we address the SMEs and the defaults and also the NPLs in the banking system, because it really creates the vicious sort of cycle in the economic recovery period. And some, especially the Fed and then European institutions have introduced special purpose vehicle, SPVs, to help providing the loans to the medium, like the small and medium SMEs, enterprises, as well as facilitate the early restructuring of the bank loans that before they actually turn into non-performing status. And it's very crucial to provide, adequate employment and social protection to avoid the possibly irreversible long-term impact on this vulnerable community. This is my last slide. Existing trade tension could be further exacerbated by economic and trade impact of COVID. When the countries all see that their national income, national employment are being hit, they tend to look a bit more inward and then provide more, announce more like a protectionist measures. We should at all costs avoid that. Transparent and predictable trade regime is more important than ever. Countries should move away from the unilateral action because, again, given the prospect of economic slowdown, these unilateral action likely to be more protectionist sort of sentiments and then measures. More regional and global cooperation is needed when moving to a new normal. We saw what new normal will look like by Chatib's slides. We really need to prepare for much better and then smarter public health and insurance systems, and how do we actually encourage the tourism using the online services and moving to more online, non-face-to-face and then non-contact sort of present non-contact sort of smart system by facilitating digital transformation. And we need to also create more resilient supply chains. But by being resilient supply chain doesn't really mean that it has to be all done domestically, and then it has to it's all under sort of protectionist the measures. It really have to be still based on the consensus what's really important and how to keep the the markets open so that we still benefit from the efficiency of the global value chain. So this is my presentation, and happy to discuss later.
Thanks very much, Cyn-Young. Another very comprehensive and informative presentation. Very helpful, thank you. It does, by the way, illustrate one of the great strengths of the work of the ADB, that it does this comparative cross-country analytical work. And as Cyn-Young mentioned, I think drawing in part on, I think, Cyn-Young, your latest ADO Outlook update, which is, I guess, the flagship publication of the ADB, which is always very useful. I might just mention on the ADB has just released a highly informative volume called Asia's Journey to Prosperity, which I know Cyn-Young was heavily involved with. It's really a great read. I think it's the best general survey of Asian economic development over the past 50 years. It stops just as COVID was coming out, but if you want to get a sense of Asian economic development in recent decades, that's really the book to read. So thanks again, Cyn-Young. So let me now invite the final speaker, Professor Orville Solon, who's going to talk, I guess, mainly about the Philippines. So Orville, looking forward to your presentation, and over to you. Thank you.
Wait, no, thank you for having me. Let me take a different view at COVID and economic recovery and the response, as well as the prospects for recovery for the Philippines. The observations that I want to share with you actually draws upon a couple of discussion papers from colleagues at the University of the Philippines School of Economics. We came up with a couple of discussion papers that describe sort of our thoughts about COVID. By the time, sometime in March, it was clear to us that COVID was real for the Philippines and that there was domestic transmission, and government really had to make a difficult choice. The trade-off was the economy versus lives. And the answer, of course, depended on how much the health sector was able to cope with COVID. And in my slide, you would notice that sometime in March 2020, we only have the capacity to test 1,000 per day. Earlier, we even had to send tests to Australia for confirmation. We only had about 1,000 intensive care units. Respirators were only about 84 to 100 in Metro Manila, and the rest were spread all over the country. And then at that same time, we were already hit by what, 1,500 cases and 70 deaths. And with the news about things happening in Europe, so the decision was made to actually sacrifice the economy for people's health. So sometime in March, the entire island of Luzon, which represents probably about 70% of GDP activity, was actually locked down. I mean, nobody could travel outside their provinces, outside their homes. Various estimates have cropped up depending on COVID scenarios, but the worst case would say, well, we will probably lose about 2.5 trillion pesos. That's about maybe about 50, 60 billion dollars. And obviously the hardest hit would be sectors that rely upon high social mobility and interaction. So in fact, in what we're saying is that the Philippines in March had to bite the bullet because we did not have the healthcare system to allow us to sort of, we did not have the leeway to actually keep other things open. On the next slide is, I think this was, the next slide comes from a paper that, again, the faculty members from the School of Economics came up with, is we were all faced with a so-called opening of the Luzon lockdown. And we were saying, we were asking, there must be a way of sort of easing the tension between the economy closing it down to prevent spread of the disease versus the economy going and providing livelihood for everyone. What we came up with was, we said, maybe we should start classifying sectors, industries, firms, according to, one, how important how large their contribution would be in terms of rebooting the economy. And second, how the extent of social contact, which spells out how much potential contribution they would have in spreading the disease. So in effect, you have a 4x4 matrix here, which is like a high-low thing, which now government has adopted, and you would have high, middle, low, and varied sort of formulation. But but the second point that we wanted to make by looking at the economy in terms of the sector was really maybe in the high contact, high productivity sectors, we should have testing as a way to gauge whether the sector can be open or not. And by that, we meant the usual surveillance, sample-based random testing, which is what we would need to understand the prevalence of the disease. However, we're now on my third slide. However, logistics and trying to understand the disease, there were three sort of tensions about testing. One is, of course, that our clinicians, given the lack of capacity, were saying we should just devote all our resources to diagnostics and treatment, meaning all our capacity should just be devoted to being able to monitor the progress of treatment. The second, more recent one, as we've begun to slowly open the economy, is that we should use testing to screen workers, to gain confidence with consumers that, you know, restaurants and banks and establishments are you know, are safe, and they're less likely to get infected by workers in there. The third one, which we've been sort of insisting on, is to conduct prevalence or surveillance survey to know the exact population of where things are, because this is what we would need to sort of decide on how fast to open up the economy, where to recover the economy. And we show this matrix that we've drawn. The problem with COVID is that a lot of people would have no or little symptoms, and they would not, they're not likely to actually get tested. So they form part of that infection pool, which would lead us to continually open and close and open and close, the W recovery, as mentioned earlier. And occasion, the other thing which worried us is that in a country like the Philippines, you would have a large sector of people who, previous to COVID, would not really have any access to healthcare at all. Let me illustrate. If in a province we did a serious maternal death review survey, we would find out that the registry of deaths would be the actual number of maternal deaths, meaning mothers dying during childbirth, would be actually 1.5 times higher than what's recorded in the system. So the problem is you would have a large, there will be a portion of population that we will not be able to detect by the usual screening and testing for diagnostic and clinical purposes. So the numbers you would see, well, we wouldn't know what the actual numbers would be. So the true tests, the true way of actually knowing tests is obviously to test all, which we cannot afford, either financially or logistically. Or we can do a random test of the entire population, which some countries have done, which I don't think the Philippines is ready to do. The third possibly practical feasible option is to actually do a random sample of known populations like communities or certain group of firms or industry. As long as we understand what the biases are, then we can be able to sort of get a gauge of what prevalence would be. The other thing about prevalence and surveillance is that this, by the nature of the disease, this has to be continuously conducted. In low-risk industries, this has to be conducted maybe about a month apart, or you know, in high-risk industries, maybe 14 days, because you wouldn't trust the results of a test previous later. Now, we were offering that maybe a cost-effective way that even government and even the private sector can sort of share the cost of, so we can get a better sense of how the economy should be started by sector, is to have a combination of PCR and rapid tests together. And in the Philippines now, this is still being discussed. Sure, costs have gone down, but what seems to be prevalent in the discussions today is that for firms to actually screen their workers. The downside, as earlier speakers have pointed out, is that we have a sector who do not have firms who can actually sponsor their tests and screen them. So these are informal sectors, small construction companies, etc., small transport workers, and so on. So this brings me to my last slide, which says, because the Philippines healthcare system was a bit weak when we were caught by COVID and the virus sometime in March, we had to bite the bullet, slow down the economy. It also meant that our options for financing recovery has become sort of limited. Obviously, I don't think there's room for increasing taxes. We don't even think that the tax base for current income and consumption is the same before and after COVID. We cannot increase that. So the obvious recourse is to actually task future income and consumption. And we do this either from borrowing, either from the public, if, of course, we don't have a sense if the public would part with their cash, given the uncertainty of COVID, to buy sort of treasury bills that are issued by government. We can obviously try ADB and the World Bank and financial institutions. We don't know how many other countries would actually demand and deserve more the resources of these banks. The other recourse, which my colleagues at the school have put forward, is to actually take a non-traditional route, which is to print money, to have either the central bank print money and lend to the treasury and have the treasury spend on all these fiscal stimulus packages, or for the BSP to print money and lend to private banks for individual lending. I guess the point, these observations for me, the lesson for me from the case of the Philippines is that the health sector that you started with, which is obviously a product of years of investment, is now determining how well you can recover what you sacrificed in terms of the economy. So maybe I can end on that note, Kyle.
Thanks very much, Orville. Another really stimulating and informative presentation. Let me just mention a couple of things. Orville referred in passing to the fact that this is the product of a group at the University of the Philippines School of Economics and a discussion paper series. That discussion paper series has a particularly iconic history, I think I would say. If I'm not mistaken, Orville, the first one was produced just in the late Marcos era, and it sort of set the scene for the post-Marcos economic and political recovery. And then there've been a succession of these discussion papers at crucial periods in the Philippine history, and they've always been influential, and they've been influential because there are invariably a couple of members of Orville's School of Economics inside the Philippine government, in the cabinet. So this is really very important material. Thank you. By the way, I like the matrix. I think the matrix helps focus analytically and policy on the key issues. I suppose another point just to mention is Cyn-Young talked about the more open economies being more exposed. Dede did as well. In the Philippines, I guess a lot of that openness actually takes the form of overseas workers as much as it does trade in goods and services. And so every time there is a crisis in the world, the Philippines really has to worry about its whatever the 10 million or so overseas workers around the world. Okay, that's enough from me. We have about, I think, 20 or maybe 30 minutes for Q&A. So I think what I'm going to suggest, Gaurav, if it's okay with you, is I'll pick, we haven't really got the luxury of being able to run a kind of live webinar with direct questions. So I'm going to pick maybe 2 or 3 questions at a time and direct them to the panel. That in some cases they're to particular people, in other cases they're fairly general. So if that's, unless I hear from you otherwise, Gara, that's how I'll proceed. If it's okay. So let me start, and I'm reading off the questions from the Q&A facility in the Zoom. And I've got a question here from a guy by the name of Chris Manning. Hi, Chris, if you're listening. Chris is, of course, from ANU, but he's living in Yogyakarta, Indonesia at the moment. And the question has just simply disappeared off the screen, but I think it was to say that rich countries can do social protection fairly effectively through the tax system. In lower income countries, where a lot of the lower and middle income people don't pay taxes, what's the transfer mechanism? How can you do it? It's directed to Chatib Basri, but perhaps it also applies to the other speakers if they wish to come in on it. And a second question, and this one is to Chatib Basri again. Chatib, you're copying quite a bit. Comes from being famous. So the question to Chatib is, what do you think about the social shelter program, the middle-lower oriented policy for the community, providing services to substitute for mobility of people? And also, what do you think about Indonesia's policy to push the B30 in the midst of this COVID to maintain the stability of palm oil? That's, I think, a reference to the measures to protect the palm oil sector during the crisis. And let me add a third question, which Cyn-Young is directed to you, and it's appropriate since this is a work the ADB does a lot on, and it's from Adi Wichasono from Pajajaran University in Bandung. And Adi asks Cyn-Young, regarding your point on a more resilient value chain base for the regional effort, what kind of regional cooperation can we expect to appear in the post-COVID world, and what kind of strategic policy can regional bodies such as ASEAN member states do to re-establish this cooperation? So maybe I go first to Dede, then to Cyn-Young, and Orville, if you want to come in, please do. Thank you.
Thank you, Hal. Let me try to, I think the first and the second question is somehow related about the social protection to the lower middle income. I completely agree with Chris that the existing mechanism does not provide us with the data to the lower middle income group, because the data that we have so far is only for the poor people based on the TMP 2K, which is basically like typical of house there, or they stay, but not about the lower middle income. Actually, Ben Olken, Nuri Mahana, and myself, we are proposing several proposal in order to address this question. Yeah, the first one is we propose to use the cellular phone, because according to the data in the Susenas, the social census, national social census, 90% of the population in Indonesia own a cellular phone. And then in Indonesia, if you want to buy a SIM card, you need to register. I don't think the data is completely accurate, but maybe about 70% is more or less accurate. And then we can ask the telco company or the digital company, like the ride-hailing, like Gojek, Grab, etc. They can use the big data to look at the socio-economic condition, because we can know how much they spend every day. So by looking at this, big data, we know whether they are considered poor or rich or not, using this big data based on the socio-economic condition. And then actually what we propose is we can transfer this money through the SIM card. So people can cash out this money through the sort of like the small grocery store like Indomaret, or they can cash out through the banking sector like what we do have the so-called the program of the Link Aja. The second one is we use the so-called the pre-employment, the Kartu Prakerja. I do understand that this program has been criticized strongly, yeah, but because the training doesn't help, it's not useful at all. But I think we can use this training as a sort of like a selection criteria. If people would like to do training, even though this is not useful, it means they need money. Because if you think this training is not useful, but you want to complete the training anyway, you need money. So based on that, we can do the sort of like a selection, which one is really need the money, badly need the money. We did the same like during the cash transfer. We make the process of the cash transfer, distribution of cash transfer become very difficult. So you probably need to spend about 5 hours to get about $50 at a time. So only the poor people will stay. The middle and upper class won't spend about 5 hours only to get the $15. Yeah. By looking at this, we can do the sort of like a selecting mechanism. So we don't try to target the poor, but let the poor show themselves by using this kind of mechanism. The second question is regarding the B30. I'm not so sure because the fossil fuel price is very cheap now. Yeah, the B30 program will be attractive to the business people if the oil price, when the oil price is relatively expensive. Then there will be a substitute from the fossil fuel into the B30. Yeah, and that's the reason why the government introduced the B30. But now, you know, the oil price now is around $30. So perhaps not much incentive for the people to shift from the so-called the fossil fuel into the renewable energy. I think that's my answer, Hal.
Yep. Thanks, Dede. Cyn-Young, can I go to you, please?
Thank you. Well, I've browsed through some of the questions, and I'll just go over quickly 3 points. First, there were some questions about the model itself, like how much model the results really reflect the economic sort of vulnerability because of the structures, or the policy responses that kind of like control the pandemic, and then as well as mitigate the impact. Well, in fact, the scenarios and then this simulation broadly based on really the analysis of the economic structure, industrial composition of the economy, and then how those really make the economies vulnerable. So this really is the basis of the model. But of course, you know, we monitor the first about like 3 months at least since the outbreak, and then how the countries have experienced in terms of which sector have been more affected, and then how much like employment has been affected. So those are being what has happened that actually incorporated into a sensitivity within the country sort of response, country impact. So those are the combination of both. When we had a separate analysis of how the policy responses affected the actual impact in the scenario simulation, we found that in fact about like 30 to even a maximum of 40% of these impacts have been mitigated by the policy responses. And then those are based on actual policies that the countries have introduced. And secondly, the Vietnam, again, it's a reflection of the economic sort of structures that Vietnam has that makes the Vietnam much more affected in terms of its employment, because Vietnam is large in the labor-intensive manufacturing, and then they are heavily export reliant. So the combination of both really influence the job losses in Vietnam in terms of the simulation results. And then finally, there are quite a lot of questions actually on the regional cooperation and the supply chain resilience. What came out during the COVID is the global supply chain as is quite vulnerable, because there have been a tendency to focus on the efficiency of the supply chain, and it has also led to really like a concentration of a certain parts in one country, or like a or one region for that efficiency gain. And also the inventory has been running low, because the supply chain management has become much more real time. So the inventory is a very lean operation, and also the just-in-time sort of a production, also due to the focus on the efficiency in terms of the supply chain management. In the post-COVID, what we see is the supply chain management will try to balance between the efficiency and also the resilience now. So there are better sort of a regional cooperation can be made in terms of the production diversification, like where the it doesn't have to be one country, but within the region, the better cooperation among the companies, among the suppliers, can allocate some of the countries, and some sub-regions may be able to collaborate in terms of the supply and then the production. And also the inventory management, it can probably be better coordinated across borders to have a bit more buffer in the inventory. If it is from the country perspective, we may have a very low inventory, but within the region, there might be a better sort of inventory cooperation. So regional sort of, and then even like a global perspective to the inventory management, and then sharing the information, like who's producing what, and then how much is actually available along the supply chain, will be a great sort of help to manage the supply chain efficient, but at the same time still becoming more resilient. And that's why, like, we also advocate the regional cooperation. To do so, we really need to have at least open borders for the essential, the production and then supply for businesses. And the supply chain resilience also requires a better information sharing and the management of inventory, at least for a group of countries rather than the country specific that is going to be much more vulnerable to a breakdown. Thanks.
Thanks, Cyn-Young. You've covered a lot of territory there. That's really interesting. It does relate a little bit to, I see a question from my ANU colleague, Peter Waugh, saying, what does it take to make supply chains more resilient? And I think, as you're implying, multinational companies are going to have to do China +1 or something else +1, which I suppose they were already starting to do with the US-China sort of trade dispute. And so maybe it will accelerate. And then the other point you mentioned, interesting, I think the so-called just-in-time model, a very famous model, is going to have to be modified, isn't it? Firms are going to need more inventories, I suppose, for a start. So thanks very much. That's very good. Now, Orville, may I turn to you, please? Would you like to come on to any of those points? Or in addition, there's a question for you from Roland Bulao asking, do you think there'll be a V-shaped recovery in the Philippines, or in the region as a whole, but in the Philippines in particular? Orville, over to you, please.
Honestly, I don't know.
I think that's what we've all got to say to these tough questions. It's a very honest answer. Thank you.
Well, what we can only look at the past, right? But I guess what COVID has pointed out to all of us economists is that those who invested adequately on a public health called the public health system, which essentially goes from surveillance all the way to sort of sophisticated ICU care, fared better. Of course, it's the economy of Taiwan and Thailand and maybe Vietnam, but remember, these countries also invested in a lot of healthcare muscle when they were threatened by SARS.
That's right. Yeah.
In the Philippines, when COVID hit, we only had about 3 labs sometime in February. Vietnam had already 100 labs that can do testing. And this is not foresight about COVID. This is really them trying to deal with the threat of SARS a decade back. And so they were able to sort of had better room for maneuvering than we did. So in the case like the Philippines, sure, we have, at least compared to the predicted number of deaths and cases, we're really far below, and that needs to be explained, hopefully with better testing. But at what cost? We've essentially closed down the economy to sort of keep those numbers around. And we could have had better leeway if the healthcare system, the public goods part of the healthcare system was there, robust and everything. And I guess you can see this on all other countries who were able to respond. We forget that the antidote to COVID, as far as the economy is concerned, is investment in public goods. Unfortunately, these pandemics like this happen very rarely. So economies globally, we tend to sort of relax. But we in the Philippines were fortunate to have had the same number of hits that other countries have. But I think we're paying a large price to be where we are today. As for the question about recovery, I don't know, because we're still trying to slowly open up. Public transport in Metro Manila has only really opened up a couple of days ago. And in a highly populated city like Cebu, they've had to close down the entire city again because of an unanticipated spread of the disease, the virus. So I guess there are two parts of looking at the virus. One is how do we recover? The other one is really taking a long-term view of how did we end up paying for more or having more deaths. So my answer is that, well, classroom solution is really, we really had to invest in public health infrastructure.
Thanks, Orville. I think that's a really crucial point because you can't just flick the switch on public health investment, can you? You need the facilities, you need the supply side, the trained personnel. Maybe governments can do pretty quick fiscal stimulus, but it's very hard to do the same for just the health sector. I think that's a crucial point. Now, we're running towards the end of our time. I do see some questions on ASEAN, including from my ANU colleague, Arion Bayajagal, and others. Where does ASEAN fit into this? I wonder if I could ask all three speakers. Cyn-Young, you've already covered it in part, but please come in again, but especially to Dede and to Orville, but Cyn-Young, if you wish, where's ASEAN in all this? If I may, I'm a great admirer of ASEAN. It's hard, you couldn't imagine Southeast Asia without ASEAN, but it has, I think it's fair to say, been the subject of a little bit of criticism. In fact, there was an earlier seminar by a very eminent Indonesian scholar, the head of CSIS, Philip Vermonte, where I forget the exact wording he used, Dede, you may remember, but it was almost like ASEAN was a non-participant in the crisis. Now, maybe I haven't got the wording right, but could you talk a little bit about ASEAN? Perhaps first to you, Dede, and then Orville and Cyn-Young, if you want to come back in again. Thank you.
Thanks, Hal. I completely agree with Cyn-Young that international cooperation is very important. Yeah, and then cooperation among the ASEAN countries, including, well, outside the ASEAN, including with Australia, is also important. That is why about a month ago, we released our report under the Asia Bureau of Economic Research. But the most important question is, let me be frank and open with you. The problem with ASEAN is everyone is so busy with their own domestic problem. Yeah, and we cannot blame them by saying that you are not interested to sort of like to do the international cooperation. The question is, we probably need to find the entry point, the common platform in which the ASEAN country would like to work together. Yeah, we need to find the hook. So one of the possible entry point is, rather than talking about the trade negotiation, trade expansion at this moment, maybe cooperation on the health issue, because I do believe that every Southeast Asian countries need the support on the health issue. The second one is the financial support, the extra budgetary support. Yeah, if we can touch this issue, then for example, like, let me give an example, because like it or not, if you're talking about ASEAN, the leadership with the ASEAN naturally should be Indonesia, by size, by everything. But the problem is, Indonesian leaders perhaps will be too busy with their own domestic, and we cannot blame them. So the strategy is, we have to find an agenda that in which that ASEAN agenda fits well with the Indonesian agenda. And two possibilities in this. The first one is the cooperation on the health sector. The second one is the extra budgetary support. Once the Indonesian leader sees that the ASEAN agenda fits well with Indonesian agenda, and there is an incentive for the leader to make this a cooperation as a fora for the cooperation. And after that, we can talk to the more and difficult and complex reform of the international cooperation. I think I'll leave it up here, Hal.
Thanks, Dede. Orville, would you like to say something on that?
Well, let me pick up on a previous comment that you made about a large, significant portion of inflows of income into the Philippines coming in from workers from abroad. COVID is actually so that having workers abroad is actually, the Philippine government has to deal with a double-edged sword. Because on the one hand, people not having any work would mean no resources coming in, no remittances. On the other hand, people coming home because they're at risk or are infected with the virus are seen by the local population as a threat and as a strain to the healthcare system. I don't think that has been properly taken into account when we've estimated what the healthcare system would need. I mean, we would typically estimate what the healthcare system would need to deal with local infection, but for hundreds of Filipinos coming home and to quarantine them, and you would hear horror stories of Filipinos because for lack of testing and testing capacity, they would be locked up in a hotel somewhere for a couple of months before they're allowed to see their family. And that's an extra cost. And cost of transporting them, commercial flights not available. That's probably what is unique. That's a unique cost of the Philippines. I guess maybe what ASEAN can do is that many of our countries actually send workers in different parts of the world. Maybe that we can start a conversation on how to deal with health refugees and dealing with health refugees. Because on the one hand, we owe them a lot. They've worked hard. On the other hand, they're seen as a threat to bring back infection domestically. And that has to be properly dealt with.
Yes, Orville, I noticed that issue of stranded overseas workers was painfully evident in Australia with the cruise ships being stuck in our ports. And it must have been a terrible ordeal for the cruise ship workers, many of whom were from your country. I think we're now just about out of time, but I do see a question from a student at the University of Indonesia. So I think we do need to give, if the organisers will permit, we do need to hear the voice of the next generation. So may I just pass on the question from it? Is it Taracella Fatia from the University of Indonesia? It's a question which is partly been covered by the others, but perhaps you'd like to come back in one last time. What do you think about opening malls, places of entertainment, schools and so on? How quickly do countries transition back to the new normal? Orville, could I start with you then? Maybe Dede and Cyn-Young might want to say something. I'm starting with you, Orville, because Manila is the mall capital of the world, right? So how quickly do we transition back to the new normal, I guess?
Just to come in, the correction to the question was really that opening malls and places of entertainment compared to schools. So
that's right. Yes, you're right. Yeah. So the opening up issue and which ones. Thanks, Garo.
No worries.
We've received a lot of questions because we've classified schools and theaters and places of culture as the lowest priority to open. Why? Because they are less important to the economy in the short run. Let me emphasize that. While on the other hand, they involve lots of social contact. So I guess a lot of thinking went to this question about school. So I don't think UP and the most Philippine schools will be opening up until maybe September or August this year. But the real question has to do with how ready is the Philippines and other countries in ASEAN. How ready are we to shift to online teaching? On my last slide, I'm sorry I wasn't able to sort of point it out. There's a picture of our president saying, in response to requests that government purchase devices so that elementary and high school students can start online teaching, his response was, let me see if I can look for money next week because we don't have the funds for that. So even we as teachers are grappling with how to, not just the logistics of it, but the content of it, shifting and growing school. So it's tough. Schools and theaters and restaurants, I don't think they're opening in Manila soon. Kala, a colleague of ours from the school, asked the question, what about the BPOs? The BPOs are in a bit, I only know about the BPOs that the Ayala Corporation manages. They've managed to sort of keep social distancing and keep the workers apart because they're actually divided into desks anyway, and see to it that the shifts they have, you know, they minimize social contact. But I think the BPOs for the Philippines would not have to do with exposing workers at risk, but would have to do with reduction in demand globally for their services. That's going to be a big question for them.
Good, thanks, Orville. Dede, do you want to come in on this, just wrapping up, and anything else on how quickly back to the new normal? You mentioned already, by the way, the malls are fairly quiet, but the traditional markets are very busy. But that and anything else on opening up? Thank you.
I think I completely agree with Orville. I just want to add one thing. Maybe the reaction from probably in the next couple of weeks, because we just reopened the economy about a week ago, probably people will focus more on the necessity goods, on the work rather than leisure. So if the question is about entertainment business, the cinema, the restaurant, they will do, but probably will take longer, including the hospitality. On the school, I completely agree with Orville. The other thing that I would like to highlight is maybe one of the reasons why not people go to the shopping mall in the beginning, because there is a substitute to the online, to the e-commerce now.
Yeah.
You don't need to, everything is now is online. You can buy everything, all the branded products until the cheap products through the e-commerce. So it's not necessarily for the people to go to the shopping mall. And I think that's one of the reasons also why so far it's been about more than 1 week. Not many people here in Jakarta went to the mall. I think that's all from me, Hal.
Thanks, Ede. Cyn-Young, any final thoughts and comments?
Well, okay. Well, I think the COVID, in a way, already presented to us what the post-COVID new normal and what post-COVID sort of world should look like. It has to be digitalized. It has to be, more resilient. But beyond all of those, I actually think the focus should be the sustainability and then inclusivity. What really made it very clear is, we are as strong as our weakest link during the COVID. We can open up, but as long as our weakest link are still vulnerable and affected, it will come back. We don't have the, vaccine yet. We don't even have the proper cure yet. So it really puts that on the spotlight that, if we do not really address the vulnerability of the weakest link, it will stay with us. This is applying both domestically, also internationally. So whatever the post-COVID world should look like, it has to be based on the principles of really the inclusiveness and sustainability.
Thank you, Cyn-Young. I think on that important note, reluctantly, I'm going to have to draw this event to a close. I want to say a big thank you to our three presenters. They've all been brilliant and engaging, and they're very busy people. So we're really grateful to you, Orville and Cyn-Young and Dede, for spending time with us. We didn't get to all the questions, but we got to quite a few of them, and I think we've learnt also quite a bit from the questions. So thank you to the participants. We don't have an applause on this facility I can see, so here's a clap from me at least. And let me hand now back to Gaurav back at Monash. And thanks again.
Thank you.
Well, thank you, Hal. And I know we've gone over time, but this sometimes tends to happen when people are engaged. So I won't take too much of your time, but I certainly want to thank, first of all, Hal Hill for his excellent moderation of the whole event. And though it came at the expense of, hearing more from Hal himself, who I'm sure has a lot to add to this discussion. Let me also thank the three panelists. I mean, as Hal said, yeah, they are busy people, and we're grateful to them for sparing the time and being with us and sharing their thoughts. With these seminars, with this webinar series, I mean, this is sort of neither the beginning nor the end of discussions. I mean, this pandemic, and it's still unfolding, and it's going to be with us for a long time. And what we are hoping to contribute is to just one more link in the conversation, if you like. And we certainly hope that the conversation will continue. And let me just briefly mention before saying goodbye and thanks to everyone. Firstly, let me also thank the audience for their participation. Again, apologies for some of the questions we couldn't get to. And perhaps there is an avenue for some of the audience to get in touch with our panelists directly as well to continue the discussion. And finally, let me just briefly mention we have two upcoming webinars next week. And on June 30th, next Tuesday, we actually have a webinar on Will Free Trade Survive COVID-19? And we have quite a distinguished panel for that, including Craig Emerson, Aditya Mattu from the World Bank, and Mia Mikic from UNESCAP. So look forward to that. And then soon on the heels of that, actually on July 2nd, we have a webinar on the pathways to economic recovery from COVID-19 with two very distinguished speakers. in Raghuram Rajan and Kaushik Basu. So the two former chief economists of the International Monetary Fund and the World Bank. So I hope many of you will be joining us for these future events. And with that, let me thank everyone once again, and till next time. Thank you very much.
Thank you. Bye-bye.
Okay.
you.
Bye.
Bye.
Thank you. Bye.
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 Thank you.
Bye.
Bye.
Bye.